Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the recent IMF forecasts, where they've come out and stated that Russia is going to be one of the strongest economies in 2024. Now, you may well have seen that article in the mainstream media and looked at it and thought, hang on a minute, I've been watching all of these videos on Joe Blogs where he's been saying that Russia is suffering as a result of the sanctions, it's doing badly. But the IMF is telling me that Russia is one of the strongest economies in the world. What's going on? Who's right and who's wrong? And what I want to do in today's video is delve into the details as to why the IMF have said that Russia is going to be one of the strongest economies in 2024, and then look under the bonnet and talk about exactly what's driving that growth and whether or not it's sustainable, or if this is just a short-term period where Russia is boosting its figures, which is going to lead to the long-term detriment of the economy. So in today's video, we're going to have a look at what's going on with the Russian ruble, because that is a true market indicator that tells us whether or not Russia is doing really well or whether there are issues in the economy. Because when an economy is doing well and everybody wants to trade with that country, there is demand for the currency and therefore the currency will appreciate in value. But when the opposite applies, obviously the currency goes down. We'll also talk about what's going on with regards to the conversion of Russia to a war economy, because that's what's happened over the last 18 months. And there are pluses and minuses when you decide to do that. So we'll go through the details as to what's gone on, what's classified as a war economy, why Russia is having a short-term benefit as a result of that, and why there are potentially some serious issues for Russia around the corner. We'll talk about what's going on with inflation and interest rates, because those two metrics are also really good indicators as to whether or not there are any issues going on in Russia right now. And then finally today, I'll wrap up with my summary as to why I think the IMF have come out and said that Russia is going to perform strongly in 2024, and why I actually think that's a negative from Russia's point of view. We'll talk about what's going to happen over the next 3 to 5 years. But before we get started on all of that, I'd like to say thank you so much to everyone that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, thank you so much for the time and effort that you've taken to do that. I know it does take time. You have to go to another website. You have to input all of your details. Thank you. I really appreciate it. And if you've signed up as a long-term supporter of the channel, either through Patreon or YouTube membership or Buy Me a Coffee membership, thank you for that long-term support. It means a lot to me. It tells me that I'm on the right track, I'm doing something right, that people are enjoying the videos and that you want to see more of them. And that long-term support really does help to motivate me. It makes me sit down and think about more videos, more ideas, more explanations that I can post on a regular basis. So thank you so much for that long-term support. The IMF recently published updated forecasts for GDP for 2024 and 2025. And those forecasts say that the global economy is expected to grow by 3.2% in both years. Now, interestingly, as I mentioned at the start of today's video, in terms of their country-by-country analysis, they've identified Russia as being one of the strongest economies in the world in 2024. And they're forecasting growth for Russia of 3.2%. which compares to 2.7% for the largest economy in the world, the USA. And you might be sitting there thinking, hang on a minute, why are you telling me this? You told me that Russia was doing very badly. How can Russia now be one of the strongest economies in the world? But there are a couple of reasons for this. Firstly, the IMF have upgraded those forecasts because of what's going on currently with oil prices. Oil prices recently spiked up again, partly as a result of OPEC Plus cutting back on oil production, and partly because of all of the issues that are going on right now in the Middle East and also in Ukraine. The oil markets are concerned that there may be disruption to supplies over the course of 2024, and as a result of that, future prices are going up. And any country that's a net exporter of oil will benefit from those increases in prices. Although there's a price cap applying on Russian oil, not all of its sales are being covered by that price cap. But one of the other main drivers that the IMF has identified is Russia's switch to being a wartime economy. The fact that President Putin is now sponsoring a lot of companies to produce items that are needed for the war in Ukraine. And we'll go on to talk about that point in more detail later in the video. One of the reasons why GDP is expected to spike in 2024 is because Russia is pumping billions of dollars into its own economy, but it isn't doing a lot of external trade. And one of the things that I want to look into right now is what's going on with the value of the ruble, because that gives us a real indication as to the strength of the Russian economy and tells us whether or not people want to buy the ruble to do trade with Russia, or if the ruble is continuing to deteriorate in value. So let's have a look at what's going on with the ruble. As I touched upon at the start of today's video, the strength of a currency gives us a really good indication as to what's going on in that economy. If your economy is doing well, if you're exporting lots of products, then people want to trade with you. Companies and countries will want to deal with you, therefore they need to buy your currency. That drives up demand for your currency, and simple economics tells us when demand for something goes up, generally speaking, the price goes up. And in this situation, the price of a currency is its exchange rate. So when you've got a currency that's appreciating in value, that tells us generally that that economy is doing well. And when you've got a situation where a currency is falling in value, it tells us that there are fundamental problems. And we've seen that in countries such as Argentina and Turkey, which I've covered a lot on the channel. Both of those economies are in severe difficulty right now, and their currencies are two of the worst performing in the world over the last 12 months. So let's have a look at what's going on with the ruble, because this will give us an indication as to what's actually happening in the Russian economy. If the Russian economy is one of the strongest in the world at the moment, then you would expect the ruble to be doing really well. This chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the last 12 months. And what this shows is that this time last year, one US dollar was trading for around 80 Russian rubles. Today, it's trading for more than 94, which represents a fall in value of around 15%. And if we zoom in and have a look at what's been happening over the last month, you can see that there's actually been an acceleration in the devaluation of the ruble. So the ruble is actually getting weaker on an ongoing basis. And just in case you're sitting there thinking, well, hang on a minute, who cares about the exchange rate between the US dollar and the ruble? Because Russia isn't doing any trade with the USA and doesn't want to deal in petrodollars. This chart shows the exchange rate between the Chinese yuan and the Russian ruble. And China is now Russia's largest trading partner, and the vast majority of all of those trades are being made in Chinese yuan. So this exchange rate is highly relevant to what's happening in the Russian economy. And what this chart shows is that this time last year, one Chinese yuan was trading for around 11 Russian rubles. Today, it's trading for around 13. So we've got the same devaluation of around 15% over the last 12 months. And if you look at what's happened over the last month, you can see the continued devaluation of the ruble. So what these charts are showing us is that the strength of the Russian economy right now isn't being driven by its export trade. We're not seeing a huge increase in the demand for the ruble. In fact, it's quite the opposite. Nobody wants to deal with the ruble. People who are still dealing with Russia are actually trading in other currencies. And what that means is that the value of the ruble has continued to fall over the last 12 months. It's becoming a dead currency. And the strength of the Russian economy is actually being driven by the move away from exporting lots of fossil fuels towards becoming a wartime economy. As I mentioned at the start of today's video, one of the things that's happening in Russia right now is that President Putin has converted the economy into a wartime economy. So it's moved away from being a commercial economy, producing things that it's selling to the rest of the world in the same way as most other economies operate. And what it's focusing in on now is producing equipment and materials that are needed to keep the war in Ukraine going. And that's actually causing a huge boom to happen in Russia right now, because the Kremlin is actually sponsoring thousands and thousands of businesses to actually produce things that they wouldn't normally produce. So we're talking things like military equipment, vehicles, things that are needed to keep the Ukraine war going. So all of those companies are having a heyday. They're making super profits from things that they know they're guaranteed to sell. These businesses no longer have to make things on a speculative basis and hope that they can compete with the rest of the world, hope that they make those sales, that they hit their sales targets, because they've got guaranteed orders from the Russian state to produce all of this equipment. And what that means is that those businesses are now fully employed. They're hiring lots of staff, bringing in lots of people and making money. And all of that is adding up to an increase of 3.2% in GDP that's forecast for 2024 by the IMF. So all of that is going really well on paper. But when you take a step back and think about what the long-term implications of that are, they are really negative from all of those businesses' perspective, because they've been strong-armed into helping Russia. They've been told that they have to do that they have to start producing things that are going to be used in the Ukraine war. And the problem that all of those companies will face in the future is that when this war comes to an end, all of those orders will stop overnight, because the Kremlin will no longer need all of that equipment and all of those materials. So they'll stop ordering everything, and those companies are going to be left in a situation where they're very quickly going to either have to produce all of the things that they were previously producing, or they could go bust. But one of the problems that they'll have is that in the meantime, obviously somebody else is satisfying that demand. If you pull out of a market and go and produce something else, somebody else will step into your shoes and start selling to all of your customers. So when you decide that you want to come back, if the war does end, it doesn't mean that all of your customers will automatically return to you, because they're very happy buying everything from the new suppliers. And so those companies are really running the risk of becoming bankrupt and illiquid at some point down the road. So whilst the wartime economy is good in terms of providing a short-term boom, what Russia needs to do is start thinking about the transition period, how all of these companies are going to go back to operating in the same way as they used to, and ask the question as to whether or not those markets will still be there for them. And we saw similar things to this happening in World War II in both the USA and Europe. There was a big push to help the war effort, and that provided a boost to the economy. However, post-war, there needed to be a lot of investment. A lot of investment firms were built up, and a lot of governments had to invest heavily into business to try to build everything back up again. And that's the problem that Russia is facing. Whilst on paper, they've got one of the best growth rates in the world for 2024, the sole reason for that is because the state is sponsoring all of that growth. And that is a short-term outlook that will prove to be problematic for the Russian economy in the long run. Whilst we're talking about the growth of the Russian economy for 2024, I thought it was worth having a look at what's actually happening in terms of inflation and interest rates, because they give us a very strong indication as to whether or not the economy is doing really well or whether there is something else going on. This chart shows the movement in the official rate of inflation in Russia over the last 12 months. And what you can see here is that between April and November 23, there was a sharp increase in the rate of inflation from 2.3% to 7.5%. And over the last 4 months, inflation has remained stubbornly high in Russia, coming in at 7.4% in December 23 and January 24, and rising to 7.7% in February and March 24. And I think what's interesting when you look at this chart and compare it to what's happening in the rest of the world, this inflation isn't being driven by an increase in global commodity prices. When we saw high rates of inflation in 2022 and 2023 in a lot of economies, it was being driven by what was happening with things like oil prices, food prices, and commodity prices. As a result, partly of the end of the COVID-19 pandemic, and then latterly the invasion of Ukraine by Russia, we saw a huge increase in a lot of those costs, and that drove up costs across the board in many economies, and we started to see inflation hitting double digits. But what we're seeing in these Russian figures isn't being driven by a global phenomenon. It's being driven up by cost increases in Russia itself. So this is partly self-inflicted as a result of the wartime economy that Russia is now operating, where it's having to encourage people to take on the jobs that it wants them to. Now, the way that a lot of economies around the world dealt with the high rates of inflation seen in 22 and 23 was to raise interest rates, which generally discourages spending because it makes borrowing more expensive and makes it more attractive to put your money in the bank and earn some interest. And many economies are now starting to see inflation coming back down as a result of increasing interest rates over the last 12 months or so. This chart shows the movement in the official rate of interest in Russia over the last 3 years. And what this shows is that since July 23, Russia has increased its interest rates on 5 separate occasions. And the total rate of interest has increased from 7.5% to 16%, which, as you can see from this table, is significantly higher than the other major economies around the world, excluding Argentina and Turkey, which are in a state of economic crisis at the moment. 16% compares to the current rate of 5.5% in the USA, 5.25% in the UK, 5% in Canada, 4.5% in the Eurozone, and 4.35% in Australia. And if we compare the current rate of interest with what happened immediately following Russia's invasion of Ukraine, when rates were increased on an emergency basis to 20%, 16% is only 4% short of that emergency level. And as you can see, Russia rapidly reduced that emergency level from 20% to 7.5%. However, despite the fact that they've hiked rates over the last 9 months, the official rate of inflation hasn't budged in the last 5 months. And this tells us that there are serious problems occurring right now in the Russian economy. So what's the summary and conclusion today? Well, I wanted to post this video because I think the reports that have been in mainstream media over the last week or so, talking about the IMF forecasts for 2024, which have identified Russia as being one of the strongest economies in the world in terms of achieving 3.2% growth, are quite misleading. Because as we've discussed in today's video, you need to look at what's driving that growth. Generally speaking, when you see GDP increasing, it means that an economy is flourishing. It's doing better at what it's always done. So in Russia's situation, you would have expected Russia to be exporting more oil and gas, making more profit, and therefore growing healthily. But as we've seen in today's video, that isn't really the case. We started off by looking at the value of the ruble. And as we saw, the value has fallen by around 15% over the last 12 months. Now, normally speaking, you would expect an economy that's doing really well to also have a currency that's growing in value, because everybody that's trading with you needs to buy your currency and therefore the value goes up. But that isn't happening with the ruble, and there are 2 reasons for that. Firstly, nobody wants to deal in rubles, so those countries that are still trading with Russia, mainly being India and China, have decided that they don't want to do any trade in rubles. China will only deal in Chinese yuan. India initially wanted to deal with Indian rupees, but Russia said no, and so they're doing a combination of Chinese yuan and UAE dirhams, but not Russian rubles. So despite the fact that Russia is still making sales of its fossil fuels, the value of its currency is falling. And the second reason why the value of the ruble is also going down is because the Russian economy is growing as a result of the fact that it's shifted towards being a wartime economy. So a lot of the growth that we're currently seeing is being sponsored by the Kremlin. Russia is paying lots of countries to produce things for the war in Ukraine. And this is producing a halo effect. We're seeing a boom for a lot of these businesses because they're no longer having to worry about making global sales, worrying about what sanctions are going to be applied against them and whether or not they can still trade with certain countries. Instead of those normal commercial issues, all of those businesses are now producing things for Russia and being paid directly by the state. And that's fantastic for those businesses in the short term. But the problem that those companies will have is that in the long term, it's going to be detrimental, because businesses need to keep marketing themselves, they need to keep developing their products to move with the times, and they need to look after their customers. And none of the companies in Russia are currently doing that. And what that means is that their customers are now being serviced by companies from elsewhere, from other parts of the world. So the longer that the war goes on, the bigger the gap is between the Russian businesses dealing with their customers or their ex-customers. And when the war in Ukraine does eventually come to an end, what those companies are going to find is that it won't be easy to just turn back to what they were doing and expect all of their customers to start buying from them again, because things move on. People change, businesses change, and buying patterns change. So what we've got right now is a boom that's being provided by the war in Ukraine. However, when the war stops, a lot of these businesses may well find that they've been left behind and that their customers have moved on and that they don't have a market. They no longer can achieve the sales that they were achieving before they switched their production to helping the war in Ukraine. And that is going to be a major problem from Russia's point of view. This is a situation that was encountered in the West following World War II. A lot of businesses were commandeered to help with the war effort. And when the war ended, those companies were bereft. They didn't know where to turn to. And what we saw is that there was a huge amount of investment that had to go into the economy to rebuild all of those businesses. And that's exactly the situation that Russia is facing. When the war in Ukraine does come to an end, we could see the biggest recession that Russia has ever experienced, because it's not going to have a sustainable business model. If it's pumping billions and billions of dollars constantly into the war effort, then when that war ends, that's going to represent a serious problem from Russia's point of view. And I guess that is actually an actual issue for everybody, because Russia may well become addicted to this war. It becomes self-fulfilling that those companies need the war to carry on. So that actually could represent a barrier from Russia's point of view to actually drawing a line under what's going on in Ukraine. So the overall summary of today's video is that the IMF have identified Russia as being one of the strongest economies in 2024. However, those figures are misleading, because when you look under the bonnet as to what's driving that growth, it's because Russia has switched its effort to becoming a wartime economy, which is good for its short-term growth, but extremely bad for its long-term prospects. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.